Right, so we are delighted that you've joined us here today. This year, it is critical to ramp up our environmental ambition and take meaningful action to ensure that future generations are able to meet their needs at least as well as we have. We're in the middle of a global climate and biodiversity crisis, and our team are actively looking for ways to remove the barriers to help you take significant environmental action in your businesses. We're delighted that this webinar today is going to provide an overview for you on greenhouse gas accounting and carbon footprint reporting. There will be an introduction to suitable methodologies and standards, including the Greenhouse Gas Protocol, and an overview of the Streamlined energy and carbon reporting compliance requirements. Our speaker today, I'm delighted to say, is Annalisa Mills, who is an expert on carbon reporting and legislation. She delivers a number of IEMA certified courses via the University of Northumbria. She's the director of True North Sustainability, and she's also the creator of the SmartCarbon Calculator tool. We're delighted to have her share some of her vast knowledge to our network. Today's session, she'll be covering the importance of understanding your carbon footprint. She'll be giving us a bit of a climate reality check and talking importantly about the Streamlined Energy and Carbon Reporting legislation, or the SECR requirements, and also who must comply. And then she's going to talk us through a case study from Newcastle Hospital's NHS Foundation Trust. The session will be followed by about a 10-minute Q&A. So if you have any questions that come up as Annalisa is giving her talk, if you could just pop that into the chat box, I'll be facilitating the Q&A, and we'll get as many of those questions answered as possible. So without further ado, I will stop sharing and I will hand over to Annalisa.
Thanks, April. I'll just share my screen if you can confirm that you can see that, okay?
Yep, that's coming through perfectly.
Brilliant. Thanks, April. And thanks very much. Thrilled to be linking up with investors in the environment and collaborating with you and all your good work. So thank you for the invitation to deliver this webinar and for that introduction, which was great. So that really, April, you've covered quite a bit about the introduction. As April has said, I trade as a sole trader as True North Sustainability and have an online carbon calculator platform, SmartCarbon. I'm also employed part-time at Northumbria University, teaching on the degree course, the master's course there, and also a range of IEMA approved courses through the university. But I'm also employed part-time as sustainability manager at Newcastle Hospital's NHS Trust. So I'll be using them as a case study towards the end of the presentation. This is just a screenshot of the SmartCarbon Calculator website, where there is a tab with more information about SECR. Some of the clients that I'm currently working with, just to give you a flavour for the types of organisations that are taking action on the three-step programme that we promote, which is to learn about the issue, be educated and informed. That's step one. Measure your footprint. Obviously, what gets measured gets managed. And then developing an action plan to reduce your contribution to the climate emergency and perhaps head towards net zero. So just to mention two of the courses that are offered via Northumbria University, there is a half-day course in climate change, which looks at a business perspective, so business resilience. Now that is a standalone course, but it also forms part one of a full day course in carbon footprinting. So there's an option to do half a day or a full day in climate and carbon training. It's currently delivered online and it's delivered over 2 half-day sessions. So what I've really done today is cherry pick some slides out of those two courses to try and give you an overview as best as I can in the time that is available. So to start off with, why calculate a carbon footprint? You know, what are the reasons? What are the business benefits? I would say people are on this webinar for a host of different reasons, so they probably all won't relate to you. But one of the key drivers is clearly legislation. We'll be talking about that today. SECR, Streamlined Energy and Carbon Reporting, came into force in April 2019. We'll focus on that. That partly replaces, because CRC has been discontinued, and also mandatory greenhouse gas reporting regs, which came in 2013, have also been replaced. I've put ESOS up there. It's not a direct correlation, but ESOS is a legal requirement for large businesses to appoint an approved energy auditor to conduct energy audits, which must be submitted to the Environment Agency. That only comes around once every 4 years, but it's in some ways overlaps a little bit with SECR. But there's all sorts of additional reasons other than just the legal drivers. Basically, everything that contributes to your carbon footprint also has a price tag associated with that. So there's opportunities for cost savings. If you have any other business initiatives in place, like Investors in Environment, obviously it's embedded within the IIE program or ISO 14001. Any management system will require you to measure, manage, and improve your performance. So clearly this aligns with those requirements. And increasingly, customers are asking for information about your environmental performance, your green credentials, knowing a bit about climate risk and building business resilience, building it into corporate risk registers, as well as opportunities for growth and innovation. Enhanced reputation is another benefit, and attracting and retaining the best staff as well. On a course I was delivering the other week, somebody was mentioning that they've just completed a series of interviews, and at every single interview, the interviewee had read their sustainability strategy and carbon report and had questions for the organisation about that, because we do know it's of increasing importance, particularly to Generation Z and to our younger generations. So if you want to attract the best, then it's another benefit, as well as, of course, the moral benefit of doing the right thing for the right reasons. So on that note, there is a climate emergency. And just to explain briefly what that means, you probably have seen this before in your GCSE geography or something, but the greenhouse effect is a natural mechanism that protects keeps our planet at an ideal temperature. So the greenhouse effect is a good thing. It gets a lot of bad press, but I'm going to explain. On its own, the greenhouse effect is critical to supporting all of the wealth of biodiversity and life that we have on our planet. It actually keeps our planet at an average of 15 degrees centigrade. So by allowing the sun's energy to enter our atmosphere, warming the land, the air, and the sea, some of that is radiated back out towards space as heat. Some of it will escape, but our greenhouse effect and our greenhouse gases hold in just enough heat to keep us at an average of 15 degrees centigrade. Called the greenhouse effect because it acts like the glass on a greenhouse. And if you were to compare to, for instance, the temperature on the moon, which is a similar distance from the sun, but of course, without the same atmosphere to harness the sun's energy, it is minus 15 degrees on the moon. So there's a 30-degree temperature difference, showing the importance of this greenhouse effect. And this is another example, the tale of two planets, where Earth, as we say, we have 15 degrees on average as a global temperature. If we compare that to Venus, which is closer to the sun, but it also has a thicker atmosphere and a stronger greenhouse effect, it's 457 degrees centigrade on average on Venus, which is clearly completely inhospitable to life. And if you compare that again to Mercury, which is closer still to the sun, but has a thinner atmosphere and a weaker greenhouse effect, it's 167 degrees there. So showing that the actual effect of the atmosphere is a key factor on the temperature of the planet. And we find ourselves now in a position where the carbon dioxide in our atmosphere is higher than at any time in the last 800,000 years. So even though there have been fluctuations, which you can see on this graph, what we're finding now is that they're higher than they have been over the past 800,000 years. Now, this is ice core data. So this is the scientists find this information out by drilling vertically through the ice sheet in Antarctica, pulling out a vertical column of ice, which has little bubbles of atmosphere, which is records, a bit like tree rings, I suppose, records over time. By analysing those bubbles, we can see what the concentration of gases was, and also by looking at the isotopes, we can also work out the temperature at the time. And what's clear in this trend is that, it's never in 800,000 years been higher than 300 parts per million of carbon dioxide in our atmosphere. In fact, the average was somewhere about 230. But today, well, the readings in 2019 that I have here, our atmosphere is at 414 parts per million and rising. I think the sobering point here is that nothing we have done has had any impact on the continual exponential growth in emissions that are in our atmosphere. Not even lockdown, unfortunately. Yes, there was a slight blip in release of greenhouse gases due to the global pandemic and the associated lockdown. But even that appears to now have been drowned out by the noise and the ongoing continual increasing quantity of these gases in our atmosphere. And as a result, we can see, because it's very closely linked and very well understood science, the connection between the gases and the temperature. So we're at a point now where we're already about 1.1 degrees warmer than our baseline, and our baseline is pre-industrial level, so before the industrial revolution. So where are we getting these gases from? I think we're probably all quite familiar with where these gases arise from. A lot of it is burning fossil fuels, whether that's for coal-fired power plants and for energy creation, whether it's in industrial processes or for transport on land, air, sea, etc. Another important greenhouse gas is methane, because methane is actually 28 times more effective at holding heat. It's a stronger greenhouse gas. So what that means is that methane being released from agriculture, for instance, any animal that chews the cud will release methane. But we've also got natural methane being released, for instance, from permafrost, and we've natural carbon being released from volcanoes, although our emissions of carbon dioxide are 100 times higher than the natural emissions are. I think what's important about this slide is just to make you aware, the reason why it's called a climate emergency is because we're at risk of passing tipping points, which would be a point of no return, whereby positive feedback loops would take hold and drive yet further warming. So it's a bit like a vicious circle and is further compounding the problem. So 3 examples would be forest fires. So the warmer the world is, a world that is 1 degree warmer has more forest fires. We're tracking that, the insurance sector's tracking that. We can see the annual increase in the number of global forest fires. And the more fires we have, the more carbon that's released, therefore holding in more heat, therefore a warmer world will have more forest fires. So it's further compounding the problem. And a bit of a double whammy with the forests is that they obviously, through photosynthesis, would take in carbon dioxide and produce oxygen. So they're the lungs of the planet, and we're depleting that defense mechanism. So to the point where, scientists warn us that the Amazon fires could burn we may not be able to put them out, and that could turn into a savanna. We've also got the reduced albedo effect. So that is where ice cover on our planet, particularly our polar regions, acts as a great big mirror and helps to regulate the entire energy balance of the planet, reflecting 95% of incoming solar radiation. But as our Arctic sea ice is shrinking, less incoming solar radiation is being reflected, more absorbed, warming the planet, causing it to shrink yet further, which we know is happening because now, the Northwest Passage has opened up for international shipping routes, and tracking sea ice, we can see that that is reducing. And the third example, although there are 15 in total, the third one is melting permafrost, where we have stores of methane underneath the permafrost. And as that thaws, the methane is escaping, therefore holding in more heat, causing yet more permafrost to melt. And the last time I delivered this course, I actually had a climate scientist attending the course, which doesn't happen every day, who informed us all that there is more equivalent tons of carbon under the permafrost than all our fossil fuel reserves put together. So you can imagine if that tipping point was to take hold and all of that was released, that would have a huge impact, meaning that we could pass the point where we couldn't go back. So the scientists in 2018 released a report called the Final Alarm, which was a warning that we shouldn't go beyond 1.5 degrees of excess heat if we were to have a 68% chance of not setting off these irreversible tipping points. So really, they gave us 12 years till 2030. So we're in that decade now. This is the decade where it is make or break. We absolutely cannot continue with business as usual. We can't even continue with just efficiencies and incremental savings. Nothing we are doing is having an impact on that ever increasing emissions curve. So we really need to demand quicker and more faster action. And this map, reproduced with permission here, is an example. It was produced in the New Scientist magazine, and it shows where we're heading. So even if all current international targets are met, which, bearing in mind many countries aren't in line with their targets, we are currently on track for a world that would be 3.4 degrees warmer or more, which is clearly past the tipping point. So it becomes 4 degrees, becomes 6 degrees, etc. And this is how the world is predicted to look if we continue on our current path, including our current reduction objectives. And this is predicted by between 2050 and the end of the century. And if you can see the key along the bottom, you'll see yellow is uninhabitable desert, brown uninhabitable due to floods and droughts, red is sea level, land loss to sea level rise. And we can see here, reforestation across the Sahara here, but by this stage we've lost the Amazon rainforest, that mature rainforest and its wealth of biodiversity. So action then, really, what's being done about this and what can we all do? Well, the good news is that we do have a lot of solutions available. Globally, wind could supply our electricity consumption 40 times over. And we also know that there's enough solar energy reaching the Earth every hour to fill the world's energy needs for a full year. So we have a lot of the solutions, and this is a fantastic little documentary if you want to feel a bit more upbeat after today's presentation. I would suggest you look this up. But 2040 is a great documentary about what the year 2040 could look like if we just adopted the tried and tested solutions that are available right now today. It's not relying on any innovation that hasn't yet happened or any silver bullet. It's just saying if we just embraced all the solutions available, what the world might look like by 2040 if we had the political will to do it. And I suppose just to try and look for reasons for hope, we have to think that we have achieved a lot in a decade before. Looking at, 6.5 years between when President Kennedy announced there would be a man on the moon and Neil Armstrong standing on the moon. So I find that quite phenomenal, what it must have been like living in that era. Or how quickly we adjusted when we've needed to in times of war or pandemic. I think there's a lot of lessons we could learn from the COVID pandemic. But working in the health sector, it's also interesting how clear the correlation is between planetary health and human health and well-being. I mean, there is no question that this is an existential crisis, that there is a very real threat that we could push ourselves to the point of extinction. But we are also looking at, with current trajectories, more deaths from climate change than from COVID. And not just, I don't say this lightly, but COVID has a light at the end of the tunnel and an end in sight, whereas climate change would be year on year annual deaths that exceed the ones we're currently seeing. And of course, once we pass tipping points, there's no going back, and it's not something you can opt to shield yourself from in your house. So it's a much bigger threat that really we need to avoid being in that situation. So the important thing is that all eyes will be on the UK in November. We are hosting the Conference of Parties, COP26, when all the world leaders will come together to discuss the Paris Agreement that was set up in 2015. And that is a framework for action. But it's important to note that the Paris Agreement, all of the targets that were submitted, the national declared contributions, currently don't add up to preventing us passing the 1.5 degree threshold. As I mentioned, they add up to 3.4 degrees. So really, we need to hold our world leaders to account and make sure that they pledge action that will keep warming below that dangerous level. Of course, we've pushed it back further and further, thereby, the challenge is greater and the timescale is shorter. But it really must be done, and it must be done this decade. And by that, I mean the change has to happen right now, not planning for by 2030. By 2030, we need to be near net zero, not 2050, as many governments have currently set that, and organisations. 2050 is meaningless, really. It's what we do in this decade that is the most important thing. And there's a lot we can all do personally. You probably instinctively aware that changing your light bulbs isn't going to fix the problem, but there are a lot of things that we can all do. And they say around 50% of our personal footprint is within our control. The other 50% is down to decisions, taken by governments and our national grid, carbon intensity, etc. So we could influence that, but we can control 50% of our footprint. And what can organisations do, which is clearly, the key focus of this webinar, is either us as individuals influencing our organisations or leading our organisations to measure, manage and reduce contribution to that problem. So one thing is measuring the carbon footprint, which is a total set of greenhouse gases caused directly and indirectly by an individual, event, organisation or product, and it's expressed as carbon dioxide equivalent. So focusing on organisations, we are going to present this as carbon dioxide equivalent because that means we're taking into account all the other 6 gases that also contribute to a warming of the planet, such as methane, as we've talked about. So here we've got an example of the greenhouse gases that contribute to global warming. It does say 25 here as a global warming potential for methane, but that's because it's from the 2007 report, which is still currently used in the emissions factors. However, this has been updated now, so you will find that's why year-on-year emissions factors do change. It's one of the reasons. There's many reasons why they change. So you can imagine if your organisation, for instance, has business travel, and that's diesel and petrol and burning fossil fuels, well, then that is going to release carbon dioxide and methane and nitrous oxide. So your emissions from burning diesel will be a combination of these 3 gases, and all your different activities will span across. Here it could be air conditioning units that use HFCs, which is why it's really important that you still look at the leakage from your air conditioning and refrigeration units, because the gas within those is many thousand times better at holding in heat. So what's the legal requirement, the SECR, Streamlined Energy and Carbon Requirements? So on the website, as I mentioned, if you want to read more, there's a tab. But basically, to confirm if they apply, any organisation that hits 2 out of 3 of these criteria are legally required to report, which is over 36 million turnover, over 18 million on the balance sheet, over 250 employees. But even if they don't apply, more and more businesses are opting to do this as standard practice anyway. Or if you're in a supply chain for a company that reports their footprint, you will probably start to find that they are asking you for your performance data so they can feed it into their scope 3 footprint. And if it does apply, then what you must do is report your energy consumption, electricity, gas and transport, and the associated scope 1 and 2 emissions for those. I'll explain what that means in a moment. At least 1 intensity metric. I would always recommend at least 2. And a narrative on the efficiency measures that you've already taken and the ones that you have planned. You also need to state the methodology that you've used. So it's not a case of just going ahead and doing this. You need to follow a recognized methodology so that your results are comparable to other organizations. Now, I'll come on to the different methodologies, but when this takes place, the legislation applies to the first financial year that starts on or after the 1st of April 2019. So depending on what your usual annual reporting year is, will depend what this what data set this applies to. And we also always stress that it should align to your financial reporting year, because it'll go into your annual report and accounts that you submit to Companies House. The reporting window should be fully aligned. So you can't delay this. And in fact, you can't delay submitting it to Companies House. The only way you can delay it is if you delay submitting your entire company report. And really, if you want to have that conversation with your board that the reason the whole company report has been held up is because you don't have your carbon footprint data, I don't know if that would go down particularly well. So what has to happen then is the report must state your annual quantity of emissions in tonnes of carbon dioxide equivalent resulting from the total UK energy used for gas, electricity and transport. And you need to use the government conversion factors for this. There's slight variations depending if you're a quoted company, a large company and an LLP, but there's also similarities. You must state your methodology, you must have an energy efficiency actions taken and planned, intensity ratios. You should also be reporting your previous year's figures. So obviously in your first year, you won't be able to do that, but this is really important because what you'll be establishing is a base year and you'll be comparing your progress against that indefinitely, because you should always report your base year and your previous year. So it really is important to get your base year as accurate as possible. If you sort of cut corners and think 80-20 rule will do, then what you're doing is you're really making a rod for your own back, because if you want to show that you reduced your footprint by 20% and you've already left 20% out of your base year, then you're going to really struggle to show the improvements that you've made. So it's really important to get this right from the outset, as accurate and as complete as possible. So how do we go about doing this? So there's a couple of different methodologies you can follow. Here's a 10-step process that I've developed. It's not based on anything in particular, but it's a recommended approach. I would suggest that you ensure that you have leadership engaged. You might need a business case. Sometimes I have clients ask me to do a climate reality check presentation to the board based on this, similar to the slides we've just covered. You really do need that buy-in. It'll be very difficult for one person to do this without leadership support. We also need to decide on the methodology, which I'll talk about in a moment. And I would always recommend that you have clear responsibility assigned and that people are competent. So it may be that they need to attend training like the one-day course that I've mentioned. You'll need to set your organizational boundaries, which is really tricky. You think that's straightforward, but I have some clients where it's taken months to get to the bottom of that question. So it's a bit detailed to get into in the webinar, but essentially you choose between operational control, financial control, or equity share. But there's a lot of implications for different choices there. Then you set your operational boundaries. That's where you decide what's in scope. What are you going to report on? Will you include your supply chain? Will you not? Will you include waste disposal? Will you not? What about employee commute, etc.? Lots to be decided there. And then you start to identify the sources of emissions within those scopes and collect your data. And you need all your data. And some data is easier to access and obtain than others. You might come across challenges, like if you rent in a shared office space, etc. There are, common tricky points that a lot of my clients come across, but there's ways around all of those. And then you calculate your emissions. That's step 7. I have so many clients that dive in at step 7 without giving enough care and thought and consideration to those preceding steps. Once you have it, you produce your report, which you then publish in the public domain. And that's the bit that will help you with your legal compliance. And then you need to also include in there your energy efficiency measures that you have taken and that you have planned. Then it's about acting. Really for me, this is what it's all about. I know this is what April and the IIE team are all about as well. We want to get to that end goal where we're taking real meaningful action towards net zero. And it's optional if you wish to have this independently verified by an external independent party. That's entirely optional. So methodologies, there is a UK government guideline which was released to support the greenhouse gas, the SECR regulations. It's actually based a lot on the greenhouse gas protocol. Now, the greenhouse gas protocol is the most widely adopted methodology globally. And I would actually always encourage that organizations follow this approach because by default, you will meet the UK requirements as well. This is really the go-to standard for carbon reporting. And what's really important are these underpinning principles. What you need to be including is emissions that are relevant. You should be aiming for a complete picture. You want consistency of methodology, so year on year you can track your progress over time. You're looking for transparently reporting any assumptions or estimations that you've had to make, any exclusions. And you're also aiming for accuracy so that it's meaningful, your results are meaningful to decision makers. And this is a good image from the greenhouse gas protocol, which really, this is now step 5 of the 10 steps I mentioned. But what this shows you is your minimum, which is really your scope 1 and scope 2. So here you're looking for direct emissions from your owned or controlled facilities and assets. So that includes gas that's consumed on site, F gases that leak from your air conditioning units. It includes any, if you have, for instance, at the hospitals, we have a combined heat and power plant on our site. That's our direct emissions because we're generating the energy there. Any vehicles, any equipment. So we're looking at your use of fuel, but also things like diesel generators, if you've got any plants, any equipment that you use. And then scope 2 is your purchased electricity, and also if you buy in heat and steam and cooling. And that's only scope 2 because the emissions are happening elsewhere, at the power plant, but they're still associated with your activities. And then scope 3, you do need to look at business travel for SECR compliance. But what these scope 3 are optional for under the greenhouse gas protocol. What you need to look at only is your grey fleet if you're paying towards the fuel. But you might also want to extend that to include air travel, trains, etc. as well. And that's a separate category to employee commute. So you need to keep that separate and make sure that they're itemized in your report. If you choose to report employee commute, which is optional. In fact, all of these are optional. Waste disposal is optional, etc. And the calculation process is that you obtain the factors from the UK government website. Now, if you've got any international operations, they fall outside SECR, but you might want to report your global footprint. You need to buy those factors from the International Energy Agency, and they're pretty pricey. We're talking thousands of pounds. And then you multiply your usage data by your emissions factor to get your CO2 equivalent. The SmartCarbon Calculator, just a couple of screenshots on that, has been designed to simplify this process, make it easier for you, save you time, and increase your confidence in the accuracy of the results presented. So this is one example screenshot. All the emissions factors, all 6,500 emissions factors are there in the background, and they're updated annually the day those emissions become available. So you have confidence. This has also been audited and externally verified, this system. And it's a bespoke platform. So you select your own emission sources that are relevant to you and you input your data. What that will mean is at the click of a button, you can track your progress on a monthly basis. You can see, which is helpful because you'll be able to see trends by scope and by particular emission source. So for instance, here, this might point out to you that May shows high gas consumption. Is that something that you expected, or could that be an error in the figures that were input into the system? So it allows you then to dig into that data and have a look. It also, at the click of a button, generates an SECR compliant report, with all the sections that you need, all your results in the table format, but there'll be sections you need to add to that, like your own narrative about your energy efficiency measures. And just to look finally at the case study before we stop for Q&A. So the case study here is Newcastle Hospitals NHS Foundation Trust. So we've been reporting our footprint. They have been reporting the footprint for since 2009. I've been with the organisation a little over 6 months, and what we've done is a base year recalculation exercise where we've realised that there were emissions missing. And we'll be publishing this in the interest of transparency. We'll be publishing this openly, that our base year now has been recalculated, and we'll be restating it, and it is higher than previously stated. But that is because it is more complete, and it is more accurate, and it is more meaningful. So we're very pleased actually with the results of that. But it's brilliant working for this organisation, particularly the Newcastle Hospitals, because our CEO, Dame Jackie Daniel, she just gets the correlation between planetary health and patient health and well-being. The stats tell us that every 1 degree rise in temperature is 1% more people turning up at A&E. And that's for a variety of reasons. Excess heat causes more death than excess cold does. We hear a lot about fuel poverty, but actually heat is more problematic for vulnerable people. But also excess heat drives higher crime rates, and in more erratic weather, like the sort of snow that we have at the moment, that results in more accidents and more road traffic accidents and more collisions. So there's a clear correlation between a more erratic climate and our patients being unwell. And that also translates down to local air quality, increases in asthma and respiratory problems, cardiac arrests, all linked to the fact that our air quality in the UK is above World Health Organization limits. In fact, they say there's 40,000 excess deaths a year in the UK from poor air quality. So what's amazing is that Dame Jackie was the first in our sector to declare that there is a climate emergency, which was very brave. Yes, some local authorities had done so, some other organisations had, but nobody had in our sector. So being the first is always a brave step. And as she said at the time, there wasn't a 49-point action plan for addressing it. She just knew that it needed to be declared as an emergency and treated accordingly. So it took us a year, but we now have our climate emergency strategy with an action plan. So this has all been led by James Dixon, our head of sustainability, who's been fantastic at pushing the whole organisation forward. And James and Dame Jackie influence the wider NHS. Dame Jackie sits on the National Net Zero panel, and they're also involved collaborating at European and global levels as well. So we know that the NHS is responsible for 5% of the total emissions across the UK. It's actually equivalent to the emissions from Heathrow, which is quite startling. So we know that our activities are essential for supporting society, but we're having a detrimental impact on the environment. So we want to be part of the solution. So we have set net zero goals to be net zero by 2030 for our direct footprint, and 2040 for our footprint plus, which is actually ahead of the national goals, because NHS England has also released net zero goals, which is 2040 for the direct footprint and 2045 for the footprint plus. So footprint plus includes our supply chain. So any organisation supplying to the NHS will have to demonstrate action to reduce footprint. And we're not the only organisation putting that pressure on supply chains, showing yet again, it doesn't really matter if you're a large business or an SME, there's expectations to measure and report. And then this is, how we've reported our footprint. And what we've got here, we report all scopes, everything, not just the minimum for legal requirements. We report it all. And what you can see is that in the blue here, our supply chain of medical equipment, devices, pharmaceuticals, etc. It makes up about 70%. When we readjust this, actually, it's over 70% of our footprint. And we're running some workshops to engage directly and collaborate and support our supply chain. That's what we're really keen to do. And then the final part is obviously developing an action plan. So what we want to do is you can use the FIEMA's, which is our Institute of Environmental Management and Assessment, have developed a greenhouse gas management hierarchy. So you'll be familiar with a hierarchy approach, maybe with waste. You'll know about eliminate, reduce, reuse, recycle. So this is similar. Can we eliminate or avoid any emissions in the first place? And I certainly think there's a lot of lessons we can adopt from our approach to this pandemic and lockdown. Is there anything that we can embed as going on, standard practice? Are there any other areas where we could further eliminate? And if not, looking at ways to reduce those. Then down towards the bottom, we've got things like substitute is putting in, renewables on your own premises. So you're substituting for grid electricity. The grid is decarbonising, but we can't sit back and just wait for that because it's not decarbonising fast enough. So then you could buy green tariffs, which mean that the proportion of energy you get from the grid is from renewables. Again, that's not enough to drive the market, which is why it's down near the bottom. That's happening anyway. And when it comes to reporting it, you need to dual report. So you can't actually claim that as an energy reduction. You have to also, if it's from the grid, you have to use the grid average factor, regardless of if you're on a green tariff or not. Although you can dual report, and you can put it sort of at the bottom of your table after your gross emissions are calculated. You can say, however, one of the actions we've taken is to buy from a green tariff. And then there's the option for offsetting and compensating. Now, we cannot offset our way out of this problem, so it can only be part of the picture, and only if it's a portfolio of actions. I do have a number of offset partners that I work with, obviously making sure that they're verifiable carbon credits on the international market, making sure that that you're using recognized carbon credits. So just to wrap up, really, that was a very quick whistle-top tour, hard to say, through some of the key elements. But to learn more, there is the full one-day course on carbon footprinting, or the half-day on the climate emergency. I'll take some questions and answers now as well, of course. Thanks very much. I'll hand back to you, April. Oh, I need to stop sharing, sorry.
Wonderful. Thank you so much, Annalisa. Always so enlightening, and you really express the need for urgency, and you break it down into such a understandable and, I think, meaningful way for hopefully everybody that's attending. And I'm aware that there's a lot of different kinds of organizations that are watching this webinar today as well. So one of the points that you mentioned was very interesting. You talked about how, personally and organizationally, we've got about 50% of the things within our footprint we're able to control, and maybe 50% of those we're able to influence. And I know that will vary depending on the sector. So that's really, really interesting in terms of where you are within an organization. Can you speak a bit about that influencing side of things? So the things that you're able to directly sort of manage and can control because you can use your purchasing power, or you can use your policies to drive those changes. For those things that are outside your business, for example, the things that feed into your Scope 3 carbon footprint, how can you influence those things? And if you could answer it both from an SME point of view, as well as maybe from a larger organization that would be subject to the SECR requirements.
Okay, well, first of all, the point I made about the 50%, just to clarify what I meant by that, was a personal carbon footprint. So each individual living in the UK can make decisions that will influence 50% of their, on average, 13 tonnes that we each emit on an individual basis. The other 50%, might be partly to do with the job that you have, but it's also national decisions like the grid, for instance. So for those of you, I've just got some great books here actually. For those of you interested to know more, I would always recommend Mike Berners-Lee, my favourite author, and there's a brilliant book, No Planet B and How Bad Are Bananas? So they're great to find out more, particularly from a personal footprint and what you can do. It's also worth noting when we talk about personal footprints that our personal footprint in the UK is not the same as the average footprint across different countries. And there's a fantastic report by Oxfam that has a really useful infographic called the champagne glass, which shows that in the top 10% of the world's population by wealth is responsible for 50% of the global greenhouse gas emissions. And the bottom 50% by wealth is responsible for only 10%. And they're the ones that are predicted to be hit the hardest if you think back to that 4-degree map. So that's on a personal perspective. On an organisational perspective, you're absolutely right. It absolutely depends on the sector. Some sectors are far more carbon intensive than others. So if you're in the energy sector or cement, for instance, there's high impact there. And then you've talked about the direct emissions from your organisation and the scope 3 ones that you can influence. So the minimum for SECR reporting is your direct footprint. So that's your energy, your electricity, your gas, and fuel for transport. But you can influence scope 3. So for instance, Scope 3 also includes if you travel by plane. That's a decision you can make, less so than influencing the airline industry. That's about deciding, well, actually, could we go by train or could we have that as a Zoom meeting rather than actually going there? So across Scope 3, there's lots of different categories where you've got greater degrees of influence. Another one in Scope 3 is leased assets. So if you're a tenant, you can influence your landlord. Or if you're leasing out assets, well, you can put in place energy efficiency measures so that the users can reduce the impact of using your leased assets. Another Scope 3 category is the use of your sold product. So if you can design your product to be more energy efficient, you can reduce the impact of your customers using your product. The supply chain is quite tricky to influence as well. So at the NHS, what we've been developing is a supply chain questionnaire. We've asked everybody, it's more than 2,000 suppliers to Newcastle hospitals, and we're asking them all to pledge their support for our declaration of the climate emergency. That's the very first and very minimum we're asking them to do. But there's more that we're asking as we go through that, including inviting them to a workshop where we're going to provide them with the skills to measure and report their footprint so that we can get more accurate information and get a better handle on what our Scope 3 actually looks like. So I've taken similar approaches when I was employed at Innovation Group. We did that with our supply chain and with other clients. So I prefer to work directly and invite them to work with us on that. So I don't know if that answers the question, April.
Yeah, it's a really good start. It's definitely an area, because we work with so many different kinds of businesses in different sectors and sizes. It's one of the areas that I find people generally, particularly SMEs, feel less confident on, because they all have sort of direct relationships with some of their suppliers, and some people feel a bit awkward about having these conversations, even if it's something as basic as, can you please use less packaging when you send us our supplies and things like that. People just don't seem to be able to readily get over that awkwardness. But certainly if their spend is going towards affecting their environmental footprint, it's clearly something that should be done. And working with suppliers is probably a really nice approach in terms of workshopping or signposting organizations. And I know some of our larger members like NHS trusts or local authorities try to use tools like Investors in the Environment, for example, to cascade out easy to use tools that can be made relevant to the organization, whatever your business type or size. So we've got a couple of really nice questions in the chat at the moment. Can you answer John's question about, is your calculator relevant for international businesses or only UK businesses?
It is, yes. We have got some international companies using it. The difference, of course, is that there's different factors for different countries. So they need to be purchased from the International Energy Agency, and they actually need to be purchased on a client by client basis. You can't buy one set of factors and just put it into the calculator and then let everybody use them. The International Energy Agency control that. So it is slightly more expensive. That's outside of my control. But yes, it certainly, we have international clients on there. And in fact, I designed it when I was employed at Innovation Group, and we were in an international global operation at the time.
Lovely, thank you. And we've got a question from Joe. Where do you see that people most struggle with collecting their data? Now, this is a really good one. I know we've got some members that have a bit of a nightmare when they're just getting started trying to get good quality data that can enable them to signpost the most carbon intensive areas of their business in a meaningful way in terms of setting an action plan up for addressing it. So do you have any recommendations on how to start?
So that is a really good question, and I'm pleased actually somebody brought it up. I should have stressed this. I haven't come across any client that hasn't had some struggle with data collection. I think that you need to go into this with your eyes open and know that this isn't necessarily going to be a straightforward or easy process, particularly the first year that you do it, before you establish your procedures and your policies and your checklists that you can replicate year on year. And it does vary from client to client, but typical challenges will be getting energy data from landlords if you rent your office space. That's a common one. Now, you don't actually need to get it. That's one thing to say. Ideally, you should, because that will be more accurate. And I would always start with that approach and ask for it. There, it's about trying to build a positive relationship with that landlord and explaining to them why you want the data. A lot of them seem to be a bit wary. Maybe they're concerned that people want to unpick the charges that they have, or they're querying them. But if you explain it's for carbon and climate reasons, but if they won't give you your individual energy use in kilowatt hours, then you could perhaps work out, if you occupy a certain percentage of the building, you can work out an average contribution from your activities. And so long as, going back to those 5 principles, so long as you're transparent about that estimation, then that's in line with good practice. And I mean, there's all variations depending, not all users of the building might be as energy intensive as each other, etc. So there's lots of ways that you can unpick that. Other challenges, always find F-gas records. For some reason, they seem to be really difficult to obtain. They shouldn't be, because for other legal reasons, these should be measured and monitored anyway for F-gas regs.
Can you define that, just in case anybody on the call isn't aware?
So F-gases are your fluorinated gases and your fugitive emissions from your refrigeration and air conditioning units. So if you've got any air conditioning units, for instance, they will be maintained, and anytime that there's a top up or a recharge of gas, it is replacing gas that has escaped. And as we saw earlier, that gas has a very high global warming potential. Now, I should point out that that's not specifically listed in the SECR legislation. However, it is a direct emission, and under Greenhouse Gas Protocol, it's a Scope 1 emission. So it really should be, in terms of good practice, should be included. And I have a lot of clients that do the minimum for SECR and then add on, these good practice categories as well. Because if you're going to do it, you may as well do it completely and do it accurately. And you can mark them as voluntary and mandatory on the rows in the table if you want to, but because F-gases can be so significant, it's important to try and get those. And there it's, approach the maintenance company if you haven't got an F-gas register in house, and ask for records of when they've maintained, when they've topped up, and also when they've disposed of units, evidence that the gas has been discharged and treated properly. So that's tricky. What else is tricky? Employee expenses. If people aren't claiming within the right window. So you might find that you've got a 12-month window and employee expenses don't quite align if people are 3 months late in declaring, for instance. So long as you document that in your methodology and you repeat that consistently, then you've got something comparative year on year. But also the quality of that data, it might not say whether it's a petrol or a diesel or an electric vehicle. So you want to improve your employee expenses so you're gathering the information that you need. If you're not getting that, you can default to average car of unknown fuel, but that will push your footprint up a bit because that's a higher factor. So you might want to look at improving that. And then, missed data, like some people will book travel through a travel centre, but you'll find the odd person books it a different way using a company credit card or something. So things fall through the cracks. So you're looking for as complete a picture as possible. Sorry, I'm rambling now, April, but there's a lot of challenges with
there's a lot. Yeah, there's a lot, but that's for people like you and I to sort of help coach.
I've thought of one more really important one, April, sorry, which is when you get your data from a third party, be really careful. So if you use a travel centre or a travel booking company, an agent, often they'll say, oh, don't worry, we'll give you your tons of carbon. And I have found huge errors in the information they provide. And when I've spoken to them directly, they just weren't really necessarily aware what, they weren't using CO2e, it was just CO2, and they weren't using radiative forcing and so on. So if you're getting your results secondhand, be really careful and make sure that you're confident before you replicate those results.
Yeah, absolutely. That's something that we look at as well through the accreditation process. So quite a few questions that some of these topics have really prompted in me and in others as well. But just to answer a couple more before we wrap up here. Another question from John. So just going back to the international businesses. So if you have a large number of sites in other countries, so he's saying 60 countries, does that equal 60 different factors?
No, by one set of international emissions factors from the International Energy Agency. But yes, there are different factors for each country, which is why using something like the SmartCarbon tool makes the process so much easier for you. But if you can imagine, the grid in the UK is quite green, but if you've also got operations in India, South Africa, or France, where there's quite a bit of nuclear, or you're going to have different tons of carbon per kilowatt hour. So the factors are different in every single country. So you buy those, as I say, from the International Energy Agency. It's just knowing how, where you're applying them and updating them each year. They'll change every year as well. So
and all of that is built into the SmartCarbon Calculator.
Yeah.
Lovely. So question from Gosha, with COVID impact and home working, I get this question quite a lot. It'd be great to hear your view. Is there any advice you can give for accurate monitoring?
Yes. So that is a common question. There are at the moment some white papers out there and some recommended methodologies to calculate home working. There's a really good one that we use. We've embedded that factor into SmartCarbon tool as well. So you can work out the impact of working from home. What's quite disappointing to people is that the results are that the impact is actually higher. And there's a very good reason for that. Offices tend to be tightly packed and quite efficient, whereas when you're working from home, that's less so the case. Now, obviously, there's all sorts of variables. Are you in an old Victorian property or a really energy efficient property? Are you home working with your partner or just on your own? Are you splitting those emissions? It's all quite complicated, but there is a methodology, and we do have that factor built in. Going back to those principles, greenhouse gas protocol principles, so long as you're transparent about that and you explain your assumptions and your methodology, then your readers will know how you've done that. The other thing is the UK government is developing a new factor to add to the BES emissions factor, so there will be a new one coming as well. So I think it's important to try and estimate what the impact is of home working, unless you're going to, you certainly can't declare a huge, well, you can, but I wouldn't recommend declaring a huge reduction in your footprint just because you've outsourced the activity to people's individual homes. So be careful that you're not sort of presenting that, overstating it, because that's greenwash really. So it's being open and honest about that, unless you're going to do that indefinitely, in which case you really have made a change that really is reducing emissions. So the other thing is you might want to talk about the commute as part of the picture, because that's where there really is a saving, because you are preventing, you are avoiding some of that travel of people going to and from the workplace. Now, commute is one of the scope 3 categories that not many organisations pick. I have a couple of clients that have been doing it, happily for them, long term. For instance, a little architects firm, small SME I've been working with for a lot of years, they've been reporting commute because more than 50% of their staff opt to travel actively to work. So they're really keen to measure that and promote that. So yeah, you can therefore perhaps say, well, the savings might not be in energy use, but the savings are there on commute.
Yeah, lovely. And there's co-benefits for that, for health, well-being, air quality.
Absolutely.
There's always a bigger picture, and it's really great question. So one final question.
Yeah.
So we clearly have made the case for large businesses that must comply and all the benefits that carbon reporting brings. But the question is, I'm a small business. Why should I publish my carbon footprint, and where could or should I do this best?
Okay, interesting question. I suppose the answer is, well, you don't have to. You don't have to measure it. You don't have to publish it. So the choice is yours. But I would argue there's a lot of benefits from doing that. You could measure it and not publish it. You might decide to just measure it for your own internal use until you're maybe more confident, and you might want to publish it in a year or two's time. If you do want to publish it, then clearly, as we've talked about, particularly with supply chain, we'll start to look more favorably on suppliers who can measure their performance, because what we're trying to do, I showed you that NHS example, and there's other clients I have in the same position. We want to accurately report what the impact is of our supply chain, and the only way we can do it accurately is if suppliers give us genuine data. I mean, at the moment, we've actually estimated based on spend categories, which gives us a ballpark, but not an accurate footprint. So you will be looked upon more favorably by any clients that are also reporting their footprint, but also, other people will see it. People, as I said, about attracting the best staff, your customers will, you'll improve your brand, your reputation and your brand value by demonstrating that you're taking the climate emergency seriously. More than 75% of the Fortune 500 companies report. So there is a trend. More and more companies are reporting each year. So you either want to be behind the curve, or, if you're a small company, you've got a chance to say, well, we were doing this ahead of the curve, as, lots of small companies are now.
Yeah, absolutely. And I know with 10 years of doing the accreditation, there's so many benefits with talking transparently about what you're doing, the challenges you face, but all of the amazing things that you can accomplish, even if you're a small team. So thank you. Thank you so much, Annalisa, for sharing your enthusiasm and your incredibly broad knowledge on the topic of carbon reporting and SECR and climate reality as well. It's very motivating, and thank you very much. So we have recorded the session today. So if anybody has missed a part of it or would like to share this with colleagues for discussion to help motivate others to go on this journey with you, that will be available on our website, and we'll be sharing that on social media. If you have questions that we didn't manage to answer, or you would like to discuss anything further with regards to accreditation or reducing, that first important step is reducing your greenhouse gas emissions, how to account for them, and then kind of what to do about communicating that story to your staff, to suppliers, and others to win that business, to improve your reputation. Just give us a shout. You can email us at info@iie.uk.com. We are partners with SmartCarbon, so we can talk through how to use that tool to enhance the integrity of your carbon footprint and your reporting. And then we also have a number of events to support you on raising awareness on these different topics, For this spring session, we've got, I think our next session coming up is around women in sustainability. We've got a session on behavior change and engagement, on communicating your sustainability story and others. So do watch our website for events and our social media channels, www.iie.uk.com/events. And then you can follow us on LinkedIn at Investors in the Environment, and then on Twitter, hashtag or at IIE UK. So again, thank you everybody for joining. Have a great day.